let me tell you just a little bit about Mr. Estes, and then we're going to pass the mic over to him, and he's going to grace us with his knowledge. So Brian Estes is currently both the CEO and CIO of a company called Off the Chain Capital. It's an amazing name. I love the name of the company, by the way. And it manages the #1 performing blockchain investment fund for over the past 4 years. Now, if that wasn't impressive enough, Mr. Estes has been advising in the area of blockchain for more than 7 years, and he's financed 5 companies that have a combined value of, y'all ready? You want to wait for it? $100 billion. Amazing.
That doesn't mean I have $100 billion.
Well, no,
let's get that clear. Yeah.
Yes, look, we're not going to look. So he wants to make it clear that that's not his pocket, but just to be a part of that kind of the investment is amazing. That's an amazing body of work. But even before that, before his immersion into blockchain, Mr. Estes was one of the top ranked investment managers in the nation. And then Morningstar, who he'll have to tell us what Morningstar is, because I don't know.
Yeah, Morningstar is a rating service that
okay.
they rank.
So Morningstar is a rating service, and they ranked him and his client performance between the years of 2004 to 2014 in the top 1/10 of 1%. That's like the top 1/10 of 1%, guys, of the Morningstar Equity Manager universe. So he's a big deal, and we're really lucky to have him. He got his bachelor's degree in economics from the University of Illinois, his master's of business administration from Washington University, and he's also studied at Cambridge University and the London School of Economics.
Thank you for the very nice introduction. So like Patrice said, I learned about blockchain back about in 2014. I come from traditional finance. That means I come from like the traditional like stock brokerage type background. I started off as a retail stockbroker when I was 22 years old, right out of college. I moved over to the institutional side. After that, I was an institutional equity broker so that was from 91 to 2004. And then in 2004, I left the company I was with and started my own company. I got tired of working for the man and wanted to do my own thing, and ran my own company for 10 years. And then in 2014, I learned about Bitcoin and blockchain, and I knew this was going to be the future, and how we were going to rebuild our entire financial system on blockchain technology. So I talked my wife into allowing me to sell my business. I sold that to Wells Fargo, and then took our money that we made from that, and started building blockchain companies back in 2014. So what I'm going to go through is just kind of like a history of what blockchain is, because when people think Bitcoin and blockchain, and there's a lot of confusion. Like a lot of people just don't understand what it is, and I didn't understand what it was either when I first learned about it. It took me about 6 months to actually figure this out. And so what I'm going to go through is a little bit of like history of money and history of blockchain and the internet. And I think after we're done here in the next 30 minutes or so, we'll be able to put all these pieces together, so it may, so you'll understand what blockchain is and what Bitcoin is. So if you're old like me, back in the 80s, you may remember like this Apple logo or this Apple advertisement, Think Different. And I always like to throw this out there too, because with Bitcoin and blockchain, you have to think differently. These aren't traditional assets. These are networks. And types of networks are like Facebook. Facebook is a network that matches up friends. Uber is a network that matches up drivers and riders. eBay is a network that matches up buyers and sellers. And that's all blockchain is. They're networks, and they're software networks that allow people to come together for commerce. And so when you so the reason I throw the slide out there is just, we have to open up our mind, because we can't value networks like we do stocks or bonds or real estate. They're valued differently. And so that's just one thing to just think about as we jump into this. What we're going to go through is a little history of money, like, what money really is. Bitcoin is an innovation. The biggest question is, why does Bitcoin have value in the first place? Isn't it just like some internet funny money? Like, why does that have value? We're going to go through, like, why would you add Bitcoin to a diversified investment portfolio? I'm going to go through our models that show you how to value Bitcoin, because that's one of the most important things that you need to know is, everybody knows what the price of Bitcoin is, right? You could pull up your phone and Bitcoin's $48,000. Well, everyone knows the price, but what's the value? Like, what is it worth? And so if you figure out what it's worth, then you know whether or not you're getting a good price when you buy it. And then I'm gonna go through a few different ways of gaining exposure to Bitcoin. Patrice already went through my background, so I'm gonna skip all over that. All right, so let's talk about the history of money for a little bit. When we as humans started using like commerce back about 10,000 years ago, we needed like some sort of central store of value of our money. And it depended on what community you lived in. But those local communities used commodities or scarce assets in their local area as their form of money. So for some, it was shells. For some communities, it was salt or stones. For Indians in the United States, it was wampum. We started using these scarce assets as our money for our local community. And then gold was discovered. And then humans started conjugating around gold as the central reserve currency of the world. And for 10,000 years, gold was the standard. It was the gold. It was the monetary unit of the world. Everything was measured within gold until about 50 years ago. And then, we went from gold to gold coins. And then about 1,000 years ago, the Chinese invented paper money. So these are notes that sat on top of the gold system. And the paper money was the new technology 1,000 years ago, because you didn't have to carry like big, heavy bags of gold around or gold coins to do commerce anymore. You can carry notes. You can carry basically IOUs for that gold. And so the Chinese invented paper money about 1,000 years ago. And then the Medici family in Italy about 560 years ago invented what's called it's the double entry bookkeeping system today, or what we know as the banking system today. So the bond market, the banking system, credit, like I said, notes, these are all invented about 560 years ago. And then all Bitcoin it's the next jump forward in money. That's all it is. We're taking the technology that we've used for the past 500 years, and what we're doing is we're distributing it out on a ledger, and we're blasting this ledger worldwide out and updating it every 10 minutes. And that's basically all Bitcoin is. It's the same ledger that we were using 500 years ago when we invented the banking system, except that instead of having one bank reconcile with another bank, we have one universal ledger that reconciles every 10 minutes. And that's the Bitcoin network. And so this is just another graphical format of the way to look at that time frame. Like I said, for 10,000 years, we used salt, shells, stone. We used gold for 3,500 years. But it's really the last 50 years that's the concern. So most people, no, I'm not going to say most, I'm saying a lot of people don't realize, but back in 1971, the US government went off the gold standard. And you actually say, well, what does that mean? So what that means is that our money is not backed by gold anymore. Throughout the history of the United States through 1971, you could take $1, go to a Federal Reserve Bank and convert that over into gold. Well, in 1971, Nixon closed the gold window. And so the convertibility of dollars into gold stopped in 1971. So you may ask yourself, well, what is our money based off of? Well, it's based off the full faith and credit of the United States. And as more and more people lose faith in the government, they're losing faith in the monetary system. They're losing faith in the money. And you've seen this over the past year. Over the past year, the Federal Reserve, which is in charge of the monetary system in the United States, has printed 37% more US dollars than it had a year ago. And you may ask yourself, well, how can the Fed just do that? How can you just print money like that? Well, they did it with the excuse of, there's a, pandemic and we need to rescue the economy. And, but I don't know if you've noticed, but prices are going up. When the Federal Reserve prints more money, prices go up. And so if you're, earning wages, you're getting left behind. If you own assets, if you own real estate, or you own Bitcoin, or you own stocks or bonds, if you own assets, those assets keep going up in price. The stock market keeps setting a new high almost every day. And the reason is that the Federal Reserve just keeps printing more and more money, which keeps driving up stock prices, which is good for people who own stocks. But for a lot of people, they're wage earners and they're getting left behind. And so if your gasoline's going up and your rent's going up and your healthcare is going up and your income's not going up, you're getting left behind. And so, there's this issue that's going on right now. And, blockchain technology, Bitcoin, is one of the solutions that's going to help fix this problem going forward. Okay, so let's talk about what Bitcoin is, how it got started, what is blockchain. Some of you may recognize these people. So Elon Musk, he's pretty recognizable. He's up in the upper right-hand corner. Luke Nozick's in the middle, and then a guy named Peter Thiel, who was the first big investor in Facebook about 12 years ago. And so these three guys started a company called PayPal. So they actually had two companies. They combined into one company, renamed it PayPal. PayPal's original mission back in 1998 was to create something like Bitcoin. They wanted to create a global currency that was independent of interference from central banks and US and governments. They wanted a completely independent currency. They worked on this for about a year, couldn't figure out how to do it, couldn't figure out how to solve that, that technology problem that was, undiscoverable until Bitcoin was invented in 2009. And so what they did was they converted PayPal and they based it on the US dollar. Even back in 1999, economist Milton Friedman identified that, with the internet, there was something missing. And what was missing when the internet was first invented 30 years ago was the ability to transfer money from person A to person B without having a central third party clear that transaction for us. And blockchain technology solves that problem. That's what blockchain does. It clears transactions on the internet for us without having a central third party do that for us. Mark Andreessen, he was 2 years younger than I was when we were at U of I together. When he graduated U of I, he started a company called Netscape. Some of you may have heard of the Netscape Navigator. It was the first internet browser. When Mark started Netscape, he wanted to create a way to transfer value through the internet also. And he couldn't figure it out either. And so like I said, when the internet was built 30 years ago, it was built incorrectly because it was built off of, on top of the credit card system. There was no way to transfer value through the internet without having a, central third party clear that transaction for us. And so when Bitcoin was discovered, when this new technology was invented in 2009, it solved that problem. And the problem was that like I said, there was no way to transfer value through the internet like we do data today. When we send each other email, we send each other data through the internet. We don't need permission to do that. We don't need anyone to clear that transaction for us either. I could send any information to anyone I want through email without permission. And then you ask yourself, why can't we do that with money? Why do I have to go to a bank and get a bank's permission to send someone money? Well, we don't anymore because of blockchain technology. And what all blockchain technology is, it's open source internet protocol software. And I know that's, a lot of words there, but just think about it. Other types of open source internet protocol software we use every day. So when you send an email, you're using what's called SMTP, Simple Mail Transfer Protocol. That's an open source internet protocol software package. When you go on the internet and you see that HTTP up in the the URL up there, HTTP stands for Hypertext Transfer Protocol. That's an open source internet protocol software package. And that's all Bitcoin is and blockchain is. They're open source internet protocol software packages. But they do one specific thing. They allow us to transfer value through the internet without having permission and without having someone clear that transaction for us because the software clears the transaction. And then the way it does this, or the why this is important, it solves what's called the double spend problem. So the double spend problem has to do with sending value through the internet. If I have a digital dollar and I send a digital dollar to Patrice, I shouldn't be able to copy and paste that same digital dollar and send it to Michael. That makes the money worthless on the internet because you're copying and pasting. So blockchain technology solves that double spend problem. And the way it does it is that it uses a ledger that's distributed around the world every 10 minutes. And this ledger enables the peer-to-peer transfer of value through the internet. So I talked about SMTP, HTTP. These are some of the other protocols that were invented 30 years ago that allow us to have what's called the internet today. Bitcoin is most like DNS. So DNS are domain names. I don't know if any of you have ever bought a domain name, but if you have, you'll realize like a domain name has value. Well, you may want to ask yourself, why does a domain name have value? A domain name has value because it's a scarce and limited resource on the internet. There's only one Amazon.com. There's only one, like Google.com. So these domain names have value because they're a scarce and limited resource on the internet. And you can think about Bitcoin the same way. There's only 21 million Bitcoin that will ever be created. And as soon as all 21 million are owned, then there won't be any left. And so if people want to buy Bitcoin, they'll have to buy it from someone who already owns it. And then the price has to go up to incentivize someone to sell some of their Bitcoin. If we take a look at how value is accumulating in blockchain versus how it accumulated 30 years ago on the internet, it's flipped upside down on blockchain. And let me explain this to you. When the internet was started, the protocol layers like HTTP, DNS, TCP, we couldn't own like HTTP or SMTP. And so if you look at where the value accumulated, it accumulated to the companies that sat on top of these open source internet protocol systems. So the companies like Google, eBay, Amazon, Netflix, Uber, they accumulated all the value. But with blockchain, it's completely upside down. If you look at the protocol layer like Bitcoin, Ethereum, Binance, that's where most of the value is being accumulated. It's being accumulated in the protocol layer. It's not being accumulated in the company layer. There's a company that went public about 3 or 4 months ago called Coinbase. Coinbase is worth $67 billion today, which is it's a big company. But if you look at the value of Bitcoin, Ethereum, Binance, all the protocols out there, they're worth about $2 trillion. The protocol layer, the software layer, is worth much, much more than the company layers are sitting on top of these. So let's go through some basic Bitcoin economics. Like I said, there's only 21 million Bitcoin that will ever be created. Right now, there's 18.8 million that have been created. It gets the software, the Bitcoin software is pre-coded, so that the way it works is that for the first, between 2009 and 2012, there was 50 Bitcoin every 10 minutes being generated. And then between 2012 and 2016, it was 25 Bitcoin. And then between 2016 and 2020, it was 12 and a half Bitcoin every 10 minutes. And now it's 6.25 Bitcoin every 10 minutes. So it's actually, it looks like about every 4 years, but it's actually every 210,000 blocks. And about every 210,000 blocks, the number of Bitcoin gets cut in half. And so that's pre-coded into the software. That's the supply, and that's fixed. Well, if we look at the demand of Bitcoin, since 2012, Bitcoin demand's been growing at over 500% per year. So if you have demand going up at 500% a year, and you have the supply, which is capped, the only other variable that could change is the price. And that's one of the reasons that Bitcoin goes up so much. It's just because more and more people are using it, and there's a finite supply of it. We could see this in this chart too, these purple columns. The 12 to 18 months after one of the Bitcoin halvings is, the best time to own Bitcoin. We're in that sweet spot right now. Bitcoin's worth 48,000 or so right now. Our models say that Bitcoin, at the end of this year could be worth as much as $100,000 by the end of this year. Another way to look at this is I've broken out the 3 different halvings on here. This is just a little bit more technical view, but what happened after the first halving, which is that gray area, Bitcoin had like a 50% correction, and then it went up like 1,000% over like a 6-month period after that. We just went through another 50% correction in Bitcoin over the past few months. I'm not saying Bitcoin's gonna go up 1,000% over the next few months, but it could double, triple, or maybe even go up much more than that. Now is a good time to be owning Bitcoin because we went through one of these 50% corrections a few months ago. I'm going to skip over the these charts right here. And then let's get to Bitcoin as an asset class. So if you think of other asset classes, you have like REITs, large cap stocks, high grade bonds, international stocks, emerging markets. Bitcoin has been the best performing asset class 10 out of the past 12 years. And so far this year, it's up about 51%, and this is data through August 12th. The next best performing asset class have been real estate, REITs, which were up 24%, and then large cap stocks, which are up about 19%. A lot of people don't realize that, Bitcoin is the best performing asset class 10 out of the past 12 years. It's not like that every year. In 2014 and 2018, it had big corrections where it went down 60 and 70%. But over the long run, Bitcoin is one of the best performing asset classes of all time. When we take a look at the adoption rate of Bitcoin, what we want to look at is what's called S-curve analysis. So S-curve analysis is how you measure the adoption rate of new technologies. And so what this shows is that Bitcoin was invented in 2009. By 2019, 10% of US households owned Bitcoin in 2019. Last year in 2020, the comptroller of the US currency, Brian Brooks, mentioned on a CNN interview that 15% of US households owned Bitcoin last year. Today it's 25%. And we're on our way to 90% adoption by 2029. So a lot of people question, is it too early to own Bitcoin? Is it too late? We're in the sweet spot. Pre 2019, it was probably too early. After 2029, it's gonna be too late. We're on mass adoption of Bitcoin. Like I said, 25% of US households own Bitcoin today. And we're on our way to 90% over the next 8 years. Let's see. Here, I'm gonna go through our models. So we have 4 models that we use to determine the value of Bitcoin. This is our most simplistic model that we have. All we do is we take the historical price of Bitcoin, we plot it out on a logarithmic scale, and then we run a linear regression line through the center of that. And so this just tells you if Bitcoin's undervalued or overvalued. Right now, the Bitcoin price is around 48,000. Our trend price based on this analysis is 54,000. So right now, Bitcoin is undervalued to where it should be. This model says that Bitcoin should be worth $76,000 by the end of the year, $188,000 by the end of 2022, and $463,000 by the end of 2023. Another model that we use, it's based off what's called Metcalfe's law. Metcalfe's law is how you measure the value of a network. And so we square the number of users, we multiply that times the transactional rate running through the network. And when we run this formula, or this model says that Bitcoin should be worth $62,000 today. And like I said, it's trading like 47, 48,000. So this model also says that Bitcoin's undervalued today. Another model that we use, it's called the stock to flow model. So stock to flow models are used to measure the value of commodities like gold, diamonds, platinum, palladium. When we apply this model to Bitcoin, we come out with a model that's 94 to 95% correlated to the historical price of Bitcoin. And what this model says is that Bitcoin should be worth $100,000 by the end of this year, $1 million of Bitcoin by 2025, and $10 million of Bitcoin by 2029. And like I said, this model is very highly correlated to the historical price of Bitcoin too. The last model that we use is we take dollars out altogether and we substitute gold as the monetary unit. This is our most accurate model. This model is 99% correlated. When we started using this model about 4 years ago, it took about 4 ounces of gold to buy 1 Bitcoin. Today, it takes 25 ounces of gold to buy 1 Bitcoin. What this model projects with 99% correlation is that at the end of this year, it's going to take 100 ounces of gold to buy 1 Bitcoin. At the end of 2025, it's going to take 1,000 ounces of gold to buy 1 Bitcoin. And at the end of 2029, so it'd take about 10,000 ounces of gold to buy 1 Bitcoin. So 10,000 ounces of gold is worth about $17 million. And that's what this model is saying, that if gold stays at the same price it is today, that Bitcoin should be worth about $17 million per Bitcoin in 2029, in about 8 years. And then not only is Bitcoin becoming more valuable in terms of gold and dollars, it's also becoming more valuable in things that we use every day. Back in 2010, it took 8,557 Bitcoin to buy 1 iPhone. Today, it takes 0.021 Bitcoin to buy a new iPhone. So Bitcoin not only is becoming more valuable in terms of stocks, bonds, gold, dollars, but also in terms of things that we use every day, like iPhones. Bitcoin is very volatile. Just to be warned, Bitcoin went through a 50% correction a couple months ago. It's normal for Bitcoin to have 30 to 50% corrections every few months. The best thing to do is just buy Bitcoin and hold it and just never sell it, and just ride out that volatility over the next 10 years. That's the best way to make the most that you can with Bitcoin. Okay, and just to summarize everything here, so why would you want to add like Bitcoin to an investment portfolio? Well, it increases your risk-adjusted returns. It's, like I said, it's the one of the best performing asset classes of all time. It's the next new mega trend based on S-curve analysis. It increases your portfolio performance. A lot of people don't understand what Bitcoin is, and so it's misunderstood, and that provides an investment opportunity just because it's misunderstood. And then it's also protection against economic uncertainty. As the Federal Reserve continues to print more and more money and debase our dollar, then we need to store our value somewhere. And for a lot of people, they can't afford stocks or real estate or big investments. But you could buy $5 worth of Bitcoin and get started today by saving your money in Bitcoin, and that will protect you against economic uncertainty going forward. There's a few different ways to get exposure to Bitcoin. One way is through Coinbase. Another one is a company called River Financial. If any use Robinhood, you can buy Bitcoin at Robinhood. If you have an account at Schwab, Fidelity, Vanguard, TD Ameritrade, you could buy the Grayscale Bitcoin Trust. It's a closed-end mutual fund that only owns Bitcoin. That symbol is GBTC. If you use PayPal, Venmo, Square, Cash App, you can buy Bitcoin through those venues. And then, we also manage money at our fund. And then that's it. So.
But before we talk about anything else, did anybody have any questions for Mr. Estes? And if so, we can definitely get you unmuted so that you can ask your question directly, because I don't want to mess your question up.
Yeah, and so there were a couple of chats on here. It says Bitcoin is limited to 21 million. That's correct. So that's hard coded into the software. That a lot of people question, well, why can't it be 41 million? Well, the way the software was coded, it was fixed at 21 million, and that can never change. Bitcoin is divisible by $100 million or 100 million. So you could buy $5 worth of Bitcoin. You don't have to buy $47,000 worth of Bitcoin. You don't have to own a whole Bitcoin. But the most important thing to do is just get started. All blockchain technology is a way for us to transfer value through the internet without having like a permission or without having someone approve that transaction for us.
Thank you, Mr. Estes. Thank you to all our participants. It was a great opportunity. And we look forward to seeing everybody on September 14th.
Thank you.